That video was titled When You Thought You Were a Goat. Now, I don't really know what that animal was, but it was pretty funny when all of the goats were heading over to the fence, took no trouble whatsoever to just pop right over it. And whatever that poor little guy was, he couldn't make the jump. And this is so relatable to Wall Street. And sometimes you get into a trade, it looks like everybody else has gotten into the trade. And next thing you know, you find yourself stuck while everybody else has moved on down the road. I know that is a relatable feeling. Today was a crazy day. The last couple of days, the market had reversed and begun to trend up. And then today it just hit a wall, a red wall, and everything's come back. Now, obviously, it was based on data. And we've got more data coming this week. We've got the FOMC notes coming tomorrow. And then at the end of the week, we've got a new non-farm payroll and jobs report that we're going to have to process. And I have to wonder whether the market is believing that those aren't going to go very well. And so they're pricing in risk now, which means that it could be a sell the rumor and buy the news if those news events are not as bad as the market is expecting. I did think this was a little bit of an overreaction, but I've got to break down the SPY for you guys today because I want to show you even more carefully and even in more detail why you need to pump your brakes on either going long or shorting these markets right now. Now, you can do scalp trades always. I'm not referring to, small scalps as things were falling apart today. The biggest profitable trade that we did in the Stocks with Josh Discord was Tesla puts to the downside, okay? Even though initially it worked out to do a short play on Tesla calls to the upside at open, the bigger play was to the downside. Obviously, Bitcoin, a lot of cryptos got absolutely destroyed. I'm going to be talking about those in an upcoming live. Make sure you don't miss it. I'm going to be running technicals on some of our favorite crypto. But the play for the day was short scalps. But here's what I'm going to caution you about. Short puts to the downside, right? It was shorting the market, but there's not actually a breakdown in this market. I'm going to take you into the SPY and I'm going to show you why it would be dangerous to go long and it would be dangerous to go short because the market's not confirmed direction. But I think I know how and when it will based on the technicals that I'm going to give you. I think it's going to be a very interesting show. This is the Stocks with Josh show. Thank you for joining me today. Thank you for taking the time to watch the video. Thank you for hitting the like and dropping a heart in the comments and just saying hi and let me know how you fared today. Were you able to get up over that obstacle of a falling market, or were you stuck behind the gate just looking around wondering what's going on? Where'd everybody go? How come the markets are so red right now? If Wall Street was easy, everybody would be doing it and everybody would be making a ton of money, but it's not. It takes a lot of skill, a lot of years, a lot of hard work. But what's nice is we're doing it together in the Stocks with Josh Discord. And even in just the last month, we've had some incredible calls over there. I gave you guys OXLO, OXLO. That bad boy went up huge since I gave that call. Matter of fact, it was around $19 the day that I called it. I believe it was December 18th. And as of today, as of this morning, it went up a total of $11. Massive, massive move on OXLO. In addition to that, we talked about Dell in the last couple videos, and we called Dell at $20, and that went just under my target of $127. It hit $126.69. Definitely a ton of meat to be made on that. Now, we got in and we got out yesterday, and I'm glad that we did. I'm glad that we locked in some profits because these are uncertain markets. That's the only certain thing that I can tell you in today's video is that these are uncertain markets. And here's what I anticipate happening right around the corner, okay? We are moving towards the Trump inauguration. The market has been pivoting low, pivoting high, and I'm going to take you into the SPY, and we can kind of look at what it's been doing. But I can tell you that the very minute that you decide to load up on puts and to go short this market for the long term, you're going to find that the market hasn't signaled that yet because we absolutely can still pop and move higher as we get closer to the inauguration day. Now, today was ugly, and there was a number of stocks that absolutely confirmed to the downside, but I'm just going to tell you, we actually need a little bit more certainty that the markets are rolling over. And I'm going to tell you why. And you would say, Josh, you're just guessing. No, the charts absolutely give clarity on what's happening in the market. I'm going to show you what clarity it gives and why the market actually didn't give us a sell signal today, and why the market is actually continuing to communicate uncertainty right now, not extreme bearishness. Yes, we've pulled back, but then we shot up, and NVIDIA, for example, was practically up there making a brand new high. Does that indicate a market that's absolutely in capitulation? No way. It absolutely does not. So we got to follow the charts. So just hold your peace. We're going to get into the SPY, and I'm going to tell you guys what it's saying to me. I have to make a few more comments, though, before I get into that about just the general environment that we're in. I've been amused by some of the commentary surrounding Donald Trump. I mean, we've heard everything in recent days, from him making an offer to buy Greenland to the idea that he might take back the Panama Canal. The other day, I heard that he was going to change the name of the Gulf of Mexico to the Gulf of America. And there's one thing for certain, one thing for absolute certain, is that the market is going to be moved by Donald Trump in the next 2 weeks. And we don't have the signal to sell, sell, sell. And unfortunately, we don't have the signal to buy, buy, buy. The other thing that I found quite interesting was all of the dialogue surrounding Meta over the last couple of days. They are reformed. They've changed their ways. They're talking about no longer censoring political conversation the way that they had been accused of censoring it in years gone by. I wasn't too long ago that I thought I heard Donald Trump call Mark Zuckerberg a weirdo. And then I believe in the last 24 hours, he said that he is apparently a reformed weirdo. And why am I talking about this? Am I getting political? No, I don't get political. I'm not advocating. I'm not tearing down or lifting up anybody. I'm just telling you that there is a lot of, the only thing that's certain is the uncertainty right now, and people are scrambling to get positioned. And I think we need to scramble to get properly positioned. And right now, we need to be keeping an eye on the charts. So Mark's doing his best to somehow get aligned with what is coming in 2025, and so should we. Yesterday, I identified a rare pattern on the SPY, which is the diamond pattern. Now, I want to go over some specifics on the diamond pattern because maybe you're not used to tracking it, which you probably wouldn't be because it is a rare pattern. It's spotted less often than the head and shoulders pattern, which could be bullish or bearish, right? Now, this particular pattern is more rare, and it's actually less reliable than the head and shoulders pattern. Now, that means that we cannot necessarily jump heavy into a position either way. But it does give direction. It doesn't tell us exactly where to buy or sell, but it does tell us about what's going on in the market right now. And that's that the sellers aren't interested in selling and the buyers aren't interested in buying. And volume on the overall S&P 500, even though it was an ugly red day, it was an ugly red day on low volume, which meant that there was low seller conviction. And the other day, when we were rocketing up in the NVIDIA rocket ship, there was actually a low volume day then as well, which meant that there was low buyer incentive on that day. And that's giving us these huge price swings on low volume. Let's go through the characteristics of the diamond pattern because I'm going to use this as a teaching opportunity. This is similar to the head and shoulders pattern, but the difference is that instead of it having a straight neckline, and we know that occasionally the necklines can be tilted on head and shoulder patterns, right? We love it when they're nice and straight and clean, but they can be tilted, right? Now, what makes a diamond pattern is that they're V-shaped, okay? So they're V-shaped on the neckline. It means that there is a changing or shifting of story on the neckline, right? And that's what gives us the diamond shape of this particular pattern. I'll show that to you in the charts. And but here's the main thing that you do. You take the diamond pattern, and when it eventually breaks to the top or the bottom, now this is a bearish one that we're dealing with on the S&P 500. I'll show you that in a minute. But when it breaks, to get confirmed, you need a super high volume day. And I want to repeat myself. Today was not that day. Today was not that day. You might have got left behind at the gate, but today was not that day. The markets have not confirmed anything. This is a sideways moving market, and you have to wonder, what is the market waiting for? What's the market looking for? Well, I've actually told you. It's waiting to see what Donald Trump's going to do. And so we're going to find out whether the market is a little interested in giving him the benefit of the doubt as we move closer to the inauguration. We might see the markets begin to drift up. We haven't seen it yet, right? We saw a little pop. Now we've seen a little drop. So largely, I don't think that we've seen what the market thinks about this coming inauguration just yet. But the main thing that we're looking for is volume. Volume after the fact. That's what we need to see, and we haven't seen it yet. And I also want to remind you guys that how this week finishes is also an indicator for how the month might go, and how the month of January goes is an indicator of how the year will go. And right now, pretty much straight through December, and right here in the first week of January, we're still moving sideways. All right, let's go look at that SPY real quick. Okay, first off, I just want to point out the lowest volume day of the week was today, even though this is one of the larger moving price days to the downside. This was actually a very, very low volume day. And so this pattern, this diamond pattern, gets confirmed when it breaks beneath or above either the top or bottom of the diamond pattern with a very, very high volume day, similar to this one back here, okay, which we don't have. And so even though we ran up the other day and we tested 600, and I talked about the fact that we would do that after we had bounced on this historic support level. We came up, we tested 600, now we've come back down. But one of the characteristics of the diamond pattern, and we talked about it, was that you have a series of higher highs, right? Followed by a series of lower lows. Okay, we had a number of those. And now we're getting this change, which is we're getting lower highs, okay? And we might end up getting higher lows, which means that we went from a period of expansion, price expansion, to price compression. And as we continue to move, what I'm arguably going to say over the next couple of weeks, whether we drift towards the top or whether we drift towards the bottom of this diamond-shaped pattern, I'm largely going to say that we're going to continue around this 594.50 price point. We're going to continue sideways. We're going to get closer to that fateful inauguration day. And that's when we're going to see what the market really thinks about this coming year, right? And we're going to see it through a very, very high conviction day, a very, very high volume day. And right now we've got the lowest volume days over the last couple weeks. Today was a very low volume day. And so the diamond pattern is what we're watching. We went from price expanding to price compressing, and we're still moving sideways. And we don't have confirmation of a move higher, and we don't have confirmation of a move lower, regardless of the day that we had. The diamond shape that we're looking at on the S&P 500 is absolutely a bearish diamond. It's not a bullish diamond. If that entire pattern was upside down and at support on its lows, then the diamond could be interpreted as bullish. But this is a bearish diamond. And so it's going to take a lot. It's going to take everything bullish in the world to push these markets up this quarter, right? And I don't know what Donald Trump's going to accomplish, but as I've been saying in my previous 2 weeks worth of videos, ever since the middle of December, I've been saying, sell the rip, okay? Sell the rip, be prepared to reposition your portfolio. I've been watching CNBC, right? And they're kind of talking the same way. All of those guys on there are talking about the fact that this is a low conviction environment. They're talking about the fact that things are very expensive, but they don't really want to sell them just yet because there's no catalyst that they would point to that would justify just dumping everything. So they're waiting. They're waiting for the catalyst. They're waiting for the earnings. They're waiting for the inauguration. They're waiting for the executive orders. And that isn't today, and it's not going to be even this week, right? It's really going to be closer to the end of this month. And that's when the fireworks are going to begin. I'm going to say from January 18th and forward, right? But it's time to get repositioned. right? And you need to be prepared to be quick and nimble. And I see in the Discord, some people are not. We did the trade on coin right before the flush. We took a position on some call options at the $2.20 price. And those flushed down. I did a quick alert and said, guys, at $1.30, doubling my position here. They ran back up to right around 205. I was able to lock out and get a profit. There was other people, we're going to call them goats, right? They were able to jump over that fence, but not everybody was. Now, this isn't about making you guys feel bad. It's about talking to you about getting prepared. It's why I talk about stop losses. It's why I talk about controlling position size. Because my position size was not that big on coin, I was able to significantly increase it on the dip and then take the risk that there would be a little bit of a pop or that might be an overreaction. And sure enough, it was, because it went from $1.30 all the way back up to $2.05. I locked in the little gain that I got, and I alerted you guys in the Discord and said, hey, we're in a shaky moment. Coin is not. It's kind of broken down. A lot of stocks are breaking down. It's time to jump over the fence and move on down the road. And I understand that some folks hold. Some folks are scared to make decisions, but that's why you want to trade small position size until you get better and better at this. Let me know in the comment section how you fared today. I imagine that for many, today was not a good day, as a lot of things, stock and crypto, absolutely crashed. At the moment, low volume day. I don't see market direction just yet, even though, as I am saying, the overarching view of the SPY right now is bearishness. But even taking big positions for a move to the downside at this point in time isn't warranted. It's not warranted. We basically have a very choppy market overall, and we can take small positions up and small positions down, but I'd be very leery about holding much overnight, and I'd be very leery about a large position size that you don't intend to get in and get out of quickly, like the goats jumping the fence. Hope this was helpful to you guys. I'm going to be doing a live again here shortly on crypto, talking about Bitcoin, XRP, and a couple other coin stock. We'll be charting that as well. Keep an eye out for that. I'll see you guys soon. Peace and blessings. Come join us in the Stocks with Josh Discord. Don't trade alone. Learn to chart, trade with me and my crown traders, and we'll do it together each and every day. Talk to you later. Bye-bye.